Is inflation dead? No, it's not. And I'm going to show you 3 places that inflation is hiding and why it matters to those of us who are stacking silver and gold. Hey everyone, thanks for joining Yankee Stacking. Today we're going to talk about inflation. It's been in the news quite a bit, and the government is loving the fact that inflation has been very low. And that's a good sign for our economy, right? Well, we need to be very careful about inflation. As a gold and silver stacker, I care very much about what's going on with inflation. In fact, I view this stuff, gold and silver, as not an investment in the traditional sense, but definitely insurance against inflation. When we talk about inflation, we usually think consumer prices, right? What the price of hot dogs and hamburgers are, especially on Memorial Day weekend, or other types of items that we buy, cars and homes and things like that. But real inflation is the increase in our currency supply. As the government prints or electronically changes the amount of money that we have in circulation, that is inflation. How we perceive or measure inflation is very important. And so that leads me to the first place where I believe inflation is hiding: a selected CPI, or Consumer Price Index. The Consumer Price Index is one big way that the government likes to measure what inflation is like. And it is trumpeted highly in the news. Now, in the past, this CPI was considered a fixed weight basket of goods and services. But it's changed. It's not a fixed weight anymore. And it isn't a basket of goods either. Ever since like the 1700s, consumer inflation had been an estimate of measuring price changes in a very fixed way. When the 1990s rolled around, Washington was trying to change the nature of the CPI. They started to substitute things. So for example, let's say the price of steak is going up. Well, what they could do is substitute steak with hamburger, because that would be less apt to be impacted by the rising prices. And they do everything they can to change that index, which destroys the concept of CPI as a measure of cost of living. Another way that our government loves to underestimate inflation with the CPI formula is through, this is a weird technical term, I know, hedonic quality adjustments. In simple terms, it means that consumer goods that experience like technological improvements are considered to have fallen in price when calculating the CPI, even if the price has stayed the same or actually has gone up. Makes me remember a saying from my dad. It said that statistics don't lie, but liars use statistics. We need to be very careful when we think inflation is so great because of measurements used by the government. So that's my first area where I think inflation is hiding: selected CPI. This leads to the second place where I think inflation is hiding, and that is shady shrinkage. I'm talking about all the things that we buy that seem to be getting smaller and smaller in size while the price stays the same. You know what I'm talking about. It's amazing to see how many cereal boxes can fit across your pantry shelf. Those boxes used to be a lot bigger, and now they look like they're on a diet. I can polish off one of these small little boxes in 2 or 3 sittings. It's really, really sad. So what this is called sometimes is shrinkflation. Shrinkflation is another way that we can hide the real effects of inflation. Here's another example. Check this out. One of my favorites, the good old Klondike bar. What would you do for one of these, huh? They have gotten so small, so narrow, so thin. Again, the price stays the same or goes up, but the size gets smaller. That's another place where inflation is hiding. Hold on one second. I think I got to eat this. Okay. Sorry about that. The third place where inflation is hiding, and it is market mania. Guys, I've said this before, and I'll say it again. The markets are in a massive bubble. We're actually seeing bubbles everywhere, but the market is one of the key places where inflation is hiding. Over-rigid reliance on conventional inflation indicators has made the mainstream economic community completely blind to the elephant in the room, which is the fact that inflation has been concentrated in asset prices rather than consumer prices. Look at this chart below that I got from realinvestmentadvice.com. It shows consumer price inflation has remained low while asset price inflation has exploded. Why? Because asset prices have been acting like a relief valve for inflationary pressures. We've pumped trillions of dollars worth of liquidity into the global financial system. This doesn't mean that we don't have an inflation problem. We have a huge inflation problem on our hands. The Fed knows what's going on here. They know the risks. They've actually tipped their hand and said they expect inflation to go up, and they're going to be ineffective in stopping it. If inflation starts to rise, they're going to do what they did last time. Cut interest rates, back the truck up and do QE4, which will be greater than all the QEs before combined. It is going to be an amazing event. And this time, I believe it's not going to work. They don't have much to cut. They're going to have to cut a lot more than where interest rates are at this point. And when it happens, the dollar is going to tank. Inflation is going to skyrocket. And this stuff right here is where you're going to want your money. This is real money. You're going to want to get out of the fiat currency as much as possible right now while the prices are so historically low. It doesn't matter if it's silver or gold. I'm not arguing for either one. You need to get tangible assets to protect yourself from inflation. So those are the three places where inflation is hiding, and you need to prepare with precious metals. Thank you so much for watching Yankee Stacking, and I hope your day is A-OK.